Central banks worldwide are increasingly turning to gold, a trend that has been gaining momentum over the past few years. They are buying more gold than they have in decades, significantly increasing their gold reserves. This trend is driven by several factors, primarily a loss of confidence in the US dollar and concerns over economic instability. The dollar has been the world's reserve currency for a long time, but its reliability is now in question due to various economic pressures. Many countries are looking for alternative reserve assets to safeguard their economies. Gold has always been a safe haven asset, prized for its intrinsic value and stability. It has intrinsic value and does not rely on any government or central bank, making it a reliable store of wealth. As a result, central banks are diversifying their reserves and turning to gold for stability and security. This increased demand from central banks is a significant development in the gold market, influencing global gold prices. It signals a shift in sentiment and a recognition of gold's enduring value as a financial asset. The implications of this trend are far-reaching, potentially reshaping global financial dynamics. It could lead to a more multipolar global financial system where no single currency dominates. The increased demand for gold has had a direct impact on its price, causing a significant surge in the market. In late 2024 and early 2025, gold prices surged to record highs, capturing the attention of investors worldwide. The price of gold broke through the $2,200 per ounce barrier in January 2025, a milestone that was closely watched by market analysts. This represents a significant increase from the $1,800 per ounce level seen in late 2024, marking a dramatic rise in a short period. This surge in prices is a clear indication of the strong demand for gold, driven by both individual and institutional investors. Investors are flocking to gold as a safe haven asset, seeking stability in uncertain times. They are seeking protection from inflation and economic uncertainty, which have been prevalent in recent months. The fear of missing out on further price gains is also driving the market higher as more investors rush to buy gold. The recent price surge is not just a blip on the radar, it is a sign of a more fundamental shift in the market, indicating a long-term trend. Gold is no longer seen as a relic of the past, but as a vital asset for the future, essential for a balanced investment portfolio. The current gold rush is not solely driven by central bank purchases. While central banks are indeed buying gold, there are other significant factors at play. Geopolitical and economic factors are playing a significant role. These factors are influencing investor behavior and market dynamics in profound ways. Global tensions and uncertainty are on the rise, leading investors to seek safety in gold. The precious metal is seen as a reliable store of value in turbulent times. The war in Ukraine and ongoing tensions in the Middle East are contributing to this uncertainty. These conflicts have far-reaching implications for global stability. On the economic front, inflation is a major concern. Rising prices are eroding purchasing power and causing anxiety among consumers and investors alike. Governments and central banks have printed vast sums of money in recent years. This monetary policy has led to an oversupply of currency in the market. This has led to a devaluation of currencies and rising prices. As a result, people are looking for assets that can preserve their wealth. Gold is seen as a hedge against inflation because its value tends to increase as the purchasing power of fiat currencies declines. This makes it an attractive option for long-term investment. The combination of these factors has created the perfect storm for gold. Investors are flocking to the precious metal as a safe haven. Investors are increasingly concerned about the state of the world. They are seeking stability and security in their investment choices. They are turning to gold as a safe haven asset to protect their wealth. In uncertain times, gold offers a sense of security and reliability. The London gold market, one of the world's largest gold trading hubs, has experienced some disruptions in recent months. This is due in part to the increased demand for physical gold. The Bank of England, as the custodian of the UK's gold reserves, has been at the centre of these developments. The Bank of England has had to increase its gold storage capacity to accommodate the growing demand. They have also faced calls to be more transparent about their gold holdings and transactions. The bank's actions are being closely watched by market participants. The situation in London highlights the global nature of the gold market and the challenges posed by the recent surge in demand. The Bank of England's response will be crucial in ensuring the smooth functioning of the gold market. Section 5. When the going gets tough, gold as a safe haven. Throughout history, gold has been a safe haven asset. Investors turn to gold during times of economic uncertainty, political turmoil, and financial market volatility. Gold's value is not directly tied to any particular currency or economy. This makes it a valuable asset to hold when other assets are declining. In the current environment, with its many challenges, gold is once again proving its worth as a safe haven. Investors are increasingly recognizing the importance of having gold in their portfolios. They are buying gold not just as a speculation, but as a form of insurance against the unknown. The current economic climate, marked by inflation, geopolitical uncertainty, and a loss of confidence in traditional assets, has made gold more attractive than ever. Section 6. The future of gold. What investors need to know. The future of gold looks bright. The factors driving the current gold rush are unlikely to disappear overnight. Central banks will continue to diversify their reserves with gold. Geopolitical tensions are expected to persist. Inflation is a persistent threat. Investors should consider these factors when making investment decisions. Gold is not just a shiny metal, it is a strategic asset that can provide stability and protection during uncertain times. Having a portion of one's portfolio allocated to gold can be a wise decision for long-term financial health. However, investors should be aware that gold prices can be volatile in the short term. They should not invest more than they can afford to lose. It is essential to do thorough research and seek advice from a qualified financial advisor. Section 7. Gold's enduring appeal, a history of trust and value. Gold has been a store of value for thousands of years. Ancient civilizations recognized its beauty and rarity. They used gold for coins, jewelry, and other valuables. Gold's historical significance and cultural importance contribute to its enduring appeal. Unlike fiat currencies, which are essentially government-issued IOUs, gold has intrinsic value. It is a tangible asset that cannot be printed or manipulated by governments. This inherent value makes gold a reliable store of wealth that transcends national borders and political systems. The history of gold is intertwined with the history of money and civilization itself. Its enduring appeal lies in its ability to hold its value over long periods, transcending the rise and fall of empires and fiat currencies. Section 8. Conclusion. A golden opportunity in uncertain times. The current gold rush presents a unique opportunity for investors. Gold is more than just a commodity. It is a safe haven asset with a history of preserving wealth. Central banks are increasing their gold reserves, geopolitical tensions are rising, and inflation is eroding the value of fiat currencies. These factors are all bullish for gold. Investors who are seeking to protect their wealth from the current economic storm should consider adding gold to their portfolios. Gold is a tangible asset with inherent value that has stood the test of time. It is a wise choice for those seeking safety and stability in an increasingly uncertain world.